It was a record close for the S&P today, making its 39th of the year. And the major averages are also on track for their third straight year of gains. Could this momentum spill over into the new year, or are there risks that are not priced in yet? Joining me now is Patrick Fruzzetti from Rose Advisors at Hightower. Patrick Fruzzetti, thank you for being here. So you think inflation is here to stay for the next couple of years, and it's not exactly priced in. Why is that, and how do you think the market will ultimately react?
Yeah, sure. Thanks for having me, Leslie. So 2025 was a good year for risk assets. The question is, how long can it last? Equity valuations are pretty expensive. Credit spreads are tight. And as Rick mentioned, there's still some uncertainty over the labor market, no hire, no fire. And I say inflation's not priced in. I think it's going to be very hard to get to the 2% target. And it really comes down to structural deglobalization and protectionism. That upward pressure on inflation will outweigh any downward disinflationary pressure that perhaps things like AI may provide in the near future.
So do you think the key read-through for the markets there is maybe you won't get as many rate cuts as you're currently counting on, and therefore, it will kind of reassess the cost of capital there? Or do you think it's the inflation picture is so risky that you could even see a rate hike in 2026?
I don't think we'll get a rate hike, but I would just say with the underlying environment, it makes it challenging to cut rates. And if they do, it means we may have a steeper yield curve, because I don't see the long end of the curve going down. And I actually think the long end of the curve could ultimately go up. If we do have those unexpected inflationary numbers come forth, at some point in 2026.
All right. And another key theme that obviously everyone's talking about this year, expected to continue talking about next year, is the AI theme. What do you think the market needs to see in 2026? If this year was the story about efficiencies and seeing some sort of ROI on all of the investment, what do you think the market needs to see in 2026 in order to further generate upside in some of these trades?
Yeah, so the market rewarded all of this AI CapEx spend in 2025, right? And we all know, look, CEOs love to spend. So they had no problem if they thought it was going to increase their share price. Of course, they could put that money to work. And I think as we move forward, 26 and 27, I think the market's going to look to see what the return on that investment is going to be eventually. And I think that that's what the market's going to look for. And it's become more competitive, right? So as with the increased CapEx spend, we know we're going to see competitive we're going to see additional dollars spent worldwide. Look at a place like China; they're clearly going to spend on AI. And in the old adages, when China walks into the room, profits walk out. So I think it's going to put pressure on the return paradigm as it relates to AI CapEx spend.
Yeah, Steve Kovac did a great story yesterday about the commoditization of some of these models and that theme for 2026. Outside of AI, though, you like healthcare for 2026. That's been a pretty beaten down sector until recently. Why do you think it's poised to prosper next year?
So two reasons. We're in a midterm election year, and if we look at the 11 of the last 12 or 13 midterm election cycles, we've seen healthcare outperform. So that's one reason. I'd also say, we talk about AI CapEx spend, with healthcare and particularly pharmaceuticals. I think they're ultimately going to benefit. Think about this sector. A lot of these companies have, relatively speaking, low multiples, and they're going to benefit from the development and optimization of drug discovery as they use things like AI. So I think that that's going to improve that sector. But most importantly, it's just a relative ballgame, and I think going into next year, they're undervalued. I think as we go through the year, maybe we have some increased volatility. Being a midterm election year, they would be a good allocation in any portfolio.